Financial advisors they've already got a great rapport with their clients. They've dealt with the clients usually for a long period of time on very personal matters. So they've spent a lot of time, effort and care to build that relationship and obviously manage that wealth. It would seem that it goes hand in hand that the financial advisor would then deal with the probate side, again on a personal matter where there's some trust there, and not refer it onto a solicitor or such as a bank where the percentage really is going to be a lot higher cost for that client, and by doing it themselves they're going to see that there's an efficient manner, it's dealt with in an efficient manner and dealt with quickly as possible. Financial advisors have usually got the very delicate information that we're going to need for probate, so such as mortgage information, investments, pensions, things like that. They're really going to have dealt with that on a day-to-day or week-to-week basis with the client, again because they've got that relationship with them. So it fits nicely with probate because that's what our probate department are going to need at that time, and therefore they're not going to have to keep going back to client all the time and pestering them at such a very sensitive time. We've seen that financial advisors can actually make around £5,000 per case. Now that's obviously an average, and an average is very hard to come by because no case is the same. Some are very small and some are very large. It really does depend how much work's involved for the associate, and obviously they set their fees by that, but we would say on average it was £5,000. Now if you're looking at just 6 cases a year, you're looking at really increasing your bottom line by between £25,000 and £50,000. No, absolutely not. Really, after the initial fact finds, our in-house specialists deal with all the probate administration. So really, after that point, the associate becomes just really a client liaison. Also, the financial advisor is actually going to get access to a new client bank, which is such as executors, beneficiaries, trustees, which opens a new door to new clients and new financial services business as well from them.
Traditionally, when an IFA looks at advising a client, what we will do is we'll obviously look at the client's life cycle from when they become a new client through to retirement and then onwards into retirement. And there's 2 distinct phases. You have the accumulation phase where a client will be earning money, creating capital. And then you have a decumulation phase, which is retirement, where they'll be taking that capital and then providing themselves with an income from it. So the whole idea is to ensure that the capital is used for the best interest of that client during the client's lifestyle. So if you take just a slight different look on that and look at it from a different angle, how about looking at the life cycle of the actual capital itself? Now, the beneficiary of the capital is going to be in the first instance the first client, but when that client dies, in a lot of circumstances there'll still be money available, which is succeeded by usually a child or a grandchild. So the idea is to look at the life cycle of the capital itself, making sure that the capital works in the best interest of the current owner of it, which obviously is the first client, and then when that client dies, it's going to be whoever owns it after that. There's going to be different financial plans that you're going to have to be put in place for the original owner and any succession owner as well. But there will be this pivotal point where the ownership will succeed from one person to another, and that's where the probate side comes into it. And it will be in the best interest of the client and the advisor to have a very fast, very efficient and a very tax effective way of actually ensuring that money moves and succeeds from one client to another one. And that's where the idea of the probate comes in.
Financial advisors are very aware of all the assets that a deceased person would have owned, and therefore they can assist the executors in preparing the reports to the revenue so that all the correct amounts of tax are paid.